If you are an NRI with a bank account, FD or mutual funds in India, there's one small mistake that can cost you up to 10 lakh rupees. Or 90% of NRIs are making these mistakes right now without even realizing. Today, I am going to show you all 5. Last month, I made a video, NRI Checklist 2026. Over 30,000 of you watched it. And in the comments, almost everyone asked the same question. What about taxes after I move abroad? What do I do with my Indian bank account? Do I still need to file ITR in India? So today, part 2, the 5 biggest tax mistakes NRI make in their first year abroad. So simple explanations, real solution. And one quick head ups, mistake number 2 has a form that takes your TDS from 30% straight down to 10%. Most NRIs have never heard of it. Don't skip that part, let's get into it. So mistake number first, not updating your bank account. And it is the very most common. The moment you become an NRI under Indian tax law, usually after spending more than 182 days outside India, your old resident saving account is no longer valid. It actually becomes illegal under FEMA Rules. But here's the thing, 95% of NRIs never tell their bank. They keep using the same HDFC, ICICI or SBI account they had before moving. So what happens? Firstly, when the bank finds out, they freeze your account without warning. Second, TDS is deducted at the wrong rate on your interest income and getting that refund later, and it's a nightmare. Third, if the income tax department catches, you can face penalties. This is where most NRIs go wrong. They think my account is in India. Why does it matter where I live? But it matters a lot. Within 30 days of moving abroad, send your bank an email, tell them, please convert my resident saving account to an NRO account. At the same time, open an NRI account too. That's where your foreign salary will go. Simple rule yaad rakhna, NRO is for old Indian money, NRI is for new foreign. Mistake number 2, paying the wrong TDS rate. Now, this is the most expensive mistake on the list. It directly takes money out of your pocket every single month. Once you become an NRI, the interest on your NRO account, your Indian FDs, your rental income, all of this gets TDS deducted by Indian banks and tenants. And the default TDS rate around 31.2%. That means if you earn 1 lakh rupees in interest, more than 31,000 is gone. Just like that. But here's the part most people don't know. India has tax treaties with the US, UK, Canada, UAE, Singapore, Australia, almost every country where NRIs live. These treaties are called DTAA, Double Taxation Avoidance Agreement. And under DTAA, you can legally bring your TDS rate down from 30% to just 10% or 15%. So don't skip this part. This one fix has saved my clients 5 to 7 lakh rupees every single year. Here's what you need to do. 3 documents you will need. First is a tax resident certificate from your current country. In the US, the IRS issues it. In the UAE, the FTA issues it. Most countries have a similar process. Second document is Form 10F, which you file online on the Indian income tax portal. Take 10 minutes only. And the third document is your PAN card. Without PAN, none of this works. Submit these 3 to your Indian bank starting next month. Your TDS drop from 30% to 10%. That's not a loophole. That's not a trick. That's literally what the law allows. Most NRIs just don't know about. So moving forward, let's talk about mistake number 3, skipping ITR filing in India. Third mistakes, and this one can actually get you into legal trouble. A lot of NRIs think I don't have any real income in India and my salary is in US. Why do I need to file an Indian tax return? That assumption is wrong. If any TDS has been deducted on your behalf in India, on interest, on rent, on capital gains, filing ITR is mandatory. And if you don't file that TDS that was deducted, you can't claim it back. The refund is just gone. Second, the income tax department can send you a notice under section 142(1). Third, late fees, interest and penalties stack up quietly. ये point miss किया तो problem हो सकती है. Even if your Indian income is below the basic exemption limit, you should still file. It is a part of compliance. To claim your refund, to keep a clean record and to avoid notice 5 years later when you are coming back to India or repatriate money to buy property in abroad. NRI files using ITR 2. The deadline is the same as resident, 31st July of every year. You can file it yourself online or get a CA to do it. And if you have claimed the lower rate we just talked about, you will always need to attach Form 67. Now let's come to mistake number 4, not declaring foreign assets in transition year. Fourth mistake, and honestly this is the most dangerous one on the list. This applies specifically to NRIs in their transition year, meaning the year you move abroad or the year you came back to India. In that specific year, if you were a tax resident of India for any part of it, all your foreign assets in your income tax return, your foreign bank accounts, your foreign stocks, your 401k in the US, your ISA in the UK, your property abroad, everything. That there's a specific section in the ITR 2 called Schedule FA, foreign assets. Now here's why this matters. Do you know the penalty for not disclosing? 10 lakh rupees per asset per year plus prosecution under the Black Money Act. This is where most NRIs get scared, but the solution is actually simple. File. Keep a clean record of every foreign account and asset. A simple Excel sheet works. Account number, bank name, country, balance of 31st December. In your transition year ITR, file out Schedule FA property. Once you do this, once you build the habit, after that you will permanently save. This is not the place to cut corners. The penalty for one missed account can wipe out of savings. So now let's talk about mistake number 5, that is sending foreign salary to the wrong account. This is the fifth and the final mistake in this video, and this one quietly destroys the biggest tax benefit NRIs have. So question arises, what's the single biggest advantage of an NRI account? The interest is 100% tax free in India. It's completely zero tax. But there's a condition: NRI accounts can only receive foreign earnings, your US salary, your UAE salary, money you have actually earned outside India. So what's the mistake? NRIs keep sending their foreign salary to their old resident saving account or to their NRO account. They think paisa to aa gaya, account doesn't matter. But it matters a lot. One, if it goes into an NRO account, you will pay 30% TDS on the interest. The tax-free benefits is gone. Second, if it goes into a resident account, there is a FEMA violation. Third, moving money from NRO back to NRE later is a paperwork mess. You need CA certificate, Form 15 CA, Form 15 CB. It's a avoidable pain. So how can we fix it? Before your first foreign salary hits, your NRI account should already be open and active. Set up the wire transfer or remittance directly to NRI. Day 1, simple rule: foreign income goes to NRI, Indian income stays in NRO, don't mix them. So not updating your bank account status. Second, we discuss paying 30% TDS when DTAA lets you pay 10%. Third, we discuss keeping ITR and losing your refund. Fourth, we discuss not declaring foreign assets in your transition year. And in the last, we discuss sending foreign salary to the wrong account. If even one of these applies to you, fix it this week, not next month, this week. And if you are not sure which mistakes applies to your situation, there is a link in the description for a free 15 minutes NRI tax consultant with our team. We will tell you exactly what to fix and is what order and in what order. Next week, part 3 is coming. Topic: the NRI checklist for the year you return to India. RNOR, foreign income, account conversion, all of it. So subscribe so you don't miss it, because every video in the series has strategies that can save your real money. The kind of advice CAs usually charge a lot for. Being an NRI doesn't mean paying double tax. It just means planning smarter. See you in part 3. Which of these 5 mistakes did you not know about? Comment below, and if you want help fixing any of them, a free 15 minutes NRI tax consultation link is in the description from Team Save Tax.